Now that the market's down more than 20% from its highs, you need to be in a more constructive frame of mind. I know that's tough when everything's getting annihilated, but this is when we start looking for opportunities, which brings me to one that you probably never heard of. It's called SS&C Technologies. It's a software company that helps financial service providers and healthcare companies by giving them the tools they need to automate huge swaths of their business. Everything from back office functions like accounting, reporting, processing, and clearing to front office functions like trading and modeling. Here's a stock that was on fire before the coronavirus meltdown. Now, a month ago, SS&C reported an excellent quarter, solid guidance, good growth. Then a few days later, the market started rolling over. In the past 3.5 weeks, the stock's lost 31% of its value, even though the business really shouldn't be that impacted by a corona-induced slowdown. That's what's happening in the stock market, though. Their software just really helps companies automate, for heaven's sake. It's got no credit risk. Don't take it from me. Let's check in with Bill Stone, the founder and CEO of SS&C Technologies, that's SS&C Technologies, to get a better sense of how his company's doing and how it's navigating for customers during a period of heightened volatility. Mr. Stone, welcome back to Mad Money.
Thanks a lot, Jim. How have you been?
Well, I've been better, frankly, because our viewers are not making money, but you're a keeper of a lot of different assets. You see a lot without that credit risk. What are you seeing, sir?
Well, Jim, I think as everybody knows, the volatility has gotten people a little bit spooked. And so, we're seeing people kind of hunker down. At the same time, a lot of our investment organizations are some of the smartest people in the world, and they're looking for opportunities.
Well, I think that's important because we are now, I think, in a mode that's gripped by panic and by fear. You have some very sophisticated investors. You obviously, as the administrator, keep track of everything. I am sure that there's still money coming in. There's still people doing something. Your clients aren't frozen.
Exactly. And, you and I are both here, and we're getting paid to do this, right?
Right.
So I think some of the things that people realize is money still being made, and after we've got enough refrigerators, we generally put it in some sort of financial asset.
Now, you did have tremendous organic growth in the fourth quarter, one of the fastest growers that I follow in the financial tech industry.
Well, as I said, we won some great deals, and we got a great sales force that work really hard at it, and so far we're plowing through Q1 as best we can, and we have some optimism.
Has the acquisition you made, Algorithmics from IBM, first of all, how did that come about? Because many of us probably didn't even know that IBM had that. But how's that fitting into your plans in 2020 so far?
Well, we really feel that the Algorithmics acquisition was a real wise one because of the talent that we got with the Algorithmics people, Mina Wallace and her team. We have about 350 people that are, strong quants, a lot of PhDs, a lot of expertise. And we think we're going to be able to marry them with all the data we have and come out with some very interesting products.
Now, would that be, we hear about algorithmic funds. Would this be something that would be linked with them, or is this just a way to be able to provide more information to your customers?
I think it's more information to our customers in a quant basis. We also have Alps, which is a spider distributor as well as an asset manager. And Leighton Spar, who runs that for us, is very excited about opportunities to add some more analytics into things like interval funds.
Right. Now, when I was a hedge fund manager, sir, I guess I could have desperately needed you. I did a lot of stuff that was administrative. I hated it. I hired a lot of people, completely duplicative of what you already have, and I bet you could do it cheaper. Have people discovered that the scale you have and the data you have and the protections you have and the cybersecurity you have makes it so that they save a lot of money if they just hire you?
I believe we're making a lot of traction along that. I think one of the products that you used early on showed you an intraday P&L. So you could have a real-time P&L. And
right.
As you know, is when you make decisions as fast as people like you make, you want to have stuff that's really up to date.
Now, I'm just kind of curious, because we have to, given what's going on, are you how are you able to manage your staff in the era of the coronavirus? Are you splitting people up? Do you have them in different buildings? What are you doing to make sure that you give your clients the security and protection they need in an era where workers are getting sick?
Well, that's a really good question, Jim, and it's the time that we live in. We have 23,000 people across 93 offices in 35 countries, and we're pretty matrixed. So we have a very meshed technology-based, and we have 1,000 people in Manhattan, and we have 10,000 people in India and 5,000 people around Greater London. So, we're used to having people work remote. We have a pretty big group in China and in Hong Kong. They've been working from home for a few weeks, and so we've been able to manage and pay attention to customer service and make that our number one priority.
Last question. No degradation by having people work at home, huh?
Well, I wouldn't say that there's none. Obviously, the social aspects and the training and capability that you get when you have a group of bright people together is pretty valuable.
Right.
But given what's going on today, I would say that the degradation has been minimal.
Well, that's good to know, because a lot of people are. Look, the time to panic has already happened. Panic's never a strategy. I like the calm way that you are approaching things, sir. It's actually a delight during an era where I think people are really running around with the chicken head cut off. Bill Stone, Chairman, CEO of SS&C Technologies. Thank you so much for coming on Mad Money, sir.
Thank you, Jim.
All right, here's a business doing okay, right? 4.6% organic growth last quarter. Not a lot of risk when it comes to taking different positions. I don't know. Maybe we have to think about opportunity on days like today. Mad Money's back in.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.